Hello, everyone. I'm Chris Martenson. Welcome to this Off the Cuff. It is July 22nd. That would be Wednesday. It's just after market close, about 4:10 in the afternoon here. Very pleased to have back with us today, Wolf Richter. Wolf, welcome to the program.
Thanks for having me back, Chris.
So I'm just going to read a little something. Pelosi, she would be your senator. Is that correct?
My representative in the House.
Representative. That's right. I'm sorry. I was thinking of somebody else. So she said today she was on the Situation Room with Wolf Blitzer here. Why was I going to say Richter? That'd be wrong. And she said here, quote to Wolf, so, they're bolstering the stock market. Okay, there's a floor to the stock market. Everybody knows it's not going to go below a certain price. That's okay. End quote. So, how many things are wrong with that sentence in your mind?
Well, I'm not sure how many, but I know that the Speaker of the House never says anything that's going to hurt her net worth. And, she has gotten fairly wealthy in local politics, and that has continued in national politics. And she and her husband. And so, this is just part of what they do, and if people think that a Democrat in the White House is going to change the attitude toward the stock market, I think that's wrong. I mean, that's been a national policy by just about anybody in the White House. I mean, Reagan kind of shrugged his shoulders when the market collapsed in 1987. He kind of said things happen, but then behind the scenes, he got the Fed involved trying to keep things from going downhill. But most of the time, the presidents more or less take credit for what's going on in the stock market, and some more than others. And I think Pelosi is just chiming in there, supporting this whole scheme that the economy and everything else is sort of hooked on the stock market. And it doesn't surprise me that she said that.
Yeah. So. But it's out in the open now that Washington, D.C., the Federal Reserve, the large organs and machinery of the state kind of exist of, by, and for the elites, because, Pelosi should be aware, after so many years of public service, that half of the people in this country have zero exposure to stock. So by inflating the stock market and pumping it up, that's preferentially saying, we like the people who own stocks to be the winners in this story, and it just came out that in a single day, Bezos increased his worth. He didn't do anything by $13 billion, and the headlines were all wrong. They said he earned or all that stuff. He didn't. His paper notional wealth went up by 13 billion, which is cool. But, it devolved into this debate around, I saw on Tucker Carlson, they were sort of making it, is this capitalism? Is it not? It has nothing to do with capitalism. Capitalism is not about a central bank picking winners and losers and pumping up financial assets. It's about putting capital at risk, making products.
Well, that notion is out the window.
Is it gone?
It's gone. It's gone.
I'm pining for old days.
Yeah, we no longer have capitalism here. It's gone.
What do we have?
Well, I don't know. I mean, people say crony capitalism, but not even that. Now we have, we had an everything bubble that got bailed out by the most extravagant central bank moves in history. And so, I don't know. That has nothing to do with capitalism, and Nancy Pelosi is just an example. I walk through her neighborhood a lot when I go to the doctor, and it's Pacific Heights in San Francisco. It is gorgeous there. It's beautiful. It's probably the most expensive neighborhood in San Francisco, maybe one of the more expensive ones in the country. And that's the elite. That's where she lives, and she can't even imagine what it's like to live in some small tiny little place somewhere in Oakland or something, and that is just, and I see her motorcade go by my house when she comes in from the airport.
Motorcade? You only need one car to get from the airport.
Yeah, we need one car. Yeah, they need a motorcade, and you're talking a major motorcade, not just a couple of cars. That's just lots of vehicles, and they don't stop for red lights or anything. They just blow right through, and lots of police escorts. And so, yeah, that's the elite. That's who she is, and that's who she is rooting for.
Yeah. So we all know that stocks, we all know there's a floor. They can't go below. And I've seen that floor in operation. I sort of rail against it, shake my tiny angry monkey fist at it all the time, because you can see it happen. Stocks start to sell and it's just like a V. It's just like, no, there's a no, and they go the other way. But here's what I know about Wall Street. It consists mostly of piranhas, and you can throw as much money as you want into that to prop stocks up, but I know that it's just 1,000 piranhas are nibbling at that carcass, just taking that money and off it goes. So I'm sure Citadel does great work helping to prop the stock market, right? But they need to be paid. And after the Panama Papers, we saw that when they get paid, people like that tend to squirrel that money. It just evaporates and goes away. So I see it as a boat with 1,000 holes in it, gnawed through by piranhas, and it's just leaking all the time. So I think in part that explains why the Fed had to do more and more and more and more. Honestly, I think the stock market ought to be higher for the 20 trillion global central bank dollars that got tossed in there. But that's me.
Well, some of the central bank money printing that's going on now is actually going into consumption. So that's changing the equation a little bit. Yeah, before it just went all into asset prices. Essentially, now it's going into various efforts to prop up consumption. And so that money actually recycles in other ways than asset prices. And then that's in a way why the stock market has kind of stalled essentially since June 8th or something like that. It's up just a little bit from that point. And because the majority of the money that the Fed now throws at, the economy gets consumed, and where all the stimulus payments and all this money that the governments, not just the federal but also the state governments, throw out, some of this is getting picked up by the Fed, and so we're talking of monetization here, and that changes the equation, I think, for the stock market, and also I can see that now. We're getting some real price pressures, and in some areas where people are not working, they're not making money, they're getting money to spend, and they're spending it, and there's some supply constraints, and there's in various corners now. Suddenly, things are getting a lot more expensive fairly quickly, and this I think is obviously the Fed likes that theme to continue, but this has changed from any QE we had 5 years ago.
So where are you seeing these price pressures? What's showing up?
Well, we've groceries, for example, already. We've seen it in the used car market where there were some supply constraints. We're waiting for the rental cars to show up. They have been held off the market. Like Hertz and Advantage that went bankrupt. So those cars still haven't shown up at the auctions yet. They're still trying to sort through that in bankruptcy court. So right now there's lots of demand for used cars and supply constraints. So we've seen prices go up quite a bit. We've seen price increases. Now the energy is down. I mean, it's come up in recent weeks, but energy prices collapsed essentially. And that has brought a lot of costs down in the supply chain, and so that helped overpower some of the price gains elsewhere. But that's now finished, kind of. So I don't think oil will go back to zero or anything like that. It's still low. It's still at collapsed levels from last year, just over $40 a barrel for WTI. That's still low. It's still low, below the production cost for a lot of shale oil drillers, but it's a lot higher than it was. So and then there are price pressures in some of the things dealing with homes. So the home supplies and home improvements and materials and services. Services, big time on services, big part of the economy. Those that do open up charge more. If you want to go to your barber, you're going to pay more, and because they've got to jump through hoops to do this, and so Restaurants have gotten more expensive. We've seen that. The few that we've been to, it's eating outside, you know, suddenly you're paying more. They need to make money. They need to survive. And so I can see that building up. It's just the beginning, but you know, it's an interesting scenario to have a supply shock and to have a demand shock hit at the same time, and then to try to fix those dual shocks with money printing. And that's a situation I think that can get pretty wild.
Well, I just saw in that vein, but let's just break out the tiny violin side of it, of the story, that in major cities, so London, Sydney, New York, that properties over 10 million just basically collapsed. In New York, in Manhattan, minus 70% on a volume basis, on a per unit basis of decline year over year. So guess what? Kind of strange. People with money have decided not to buy the big properties in disease hobbled cities, and I'm using that term very carefully, not ridden, hobbled. I think that you know, the prospects of cities have certainly dimmed, and so some people have decided, maybe I don't want to, you know, buy a giant tax burden in a city. Maybe I'd rather have that place out in the country with a few bucks left over, you know. So it's been a pretty big demand shock in cities right now for at least the top end properties, which I assume are the people who are mobile. Those are always the people who have the options, right? They can decide whether to do this or that. So seen that.
Yeah, I mean, in San Francisco, a similar thing is playing out. I don't know really about the top end, but we know that we had a surge of supply on the market. San Francisco is very expensive. So the median house price is something like 1.8 million, and the median condo price in the 1.2 million area. And just now, so on a weekly basis, so this is sort of real-time data, the supply has surged starting in late June and July, and to levels that we haven't seen in a decade. And sales are back where they were in terms of pending sales, but there's no pent-up demand there. I mean, they're not they're just a little bit below where they used to be, and there's a huge trough in the middle there in March and April, and in May also. That trough is not being filled by overshooting. They're just trying to get back to where they were. So sales are kind of back, almost back where they were, but there's a huge number of units not coming on the market, have come on the market, and some of it is low end in San Francisco, meaning below 1 million. But there's also plenty of high dollar stuff coming on the market. So people are really, and there's different theories why that's happening. Some people say it's Airbnb hosts trying to sell the units now that they can't make any money. And there's others like in Carmel by the Sea. There's a nice place. And I know a realtor there, and they told me they're getting all sorts of interest from the Bay Area cities, people, wealthy people who want to get away from the big cities where they live now, and so there's definitely a change going on that will develop further as we go down. I mean, housing lacks, the data lacks so far, so we don't really know what happens today. And like in the stock market, you know, we know what happened a few weeks or months ago. So yeah, that trend will have to play out, but. There's, yeah, on the high end, on the expensive side, you know, which means across the board in San Francisco, but the high end too, there's big changes underway.
Yeah, do you think those are pretty long lasting changes would be my guess? Yeah.
Yeah, so I've heard these stories for years, you know, where every year we get surveys in San Francisco that say something like 40% of all renters want to leave the city, and they never do. You know, they always say we want to leave, and then they don't. And a lot of people who live here say, well, please pack up and leave. It's too congested here, too crowded. It's time for you to follow through. And so I don't know if this is long-term or not. I suspect that some of it is work from home, that has long-term impacts. Now that's some people will go back to work, and others, will continue to be able to work from home, and will continue to do that at least 4 days a week or something, and go to work one day, or go to 1 day a week, or maybe 2 days a month or something. Yeah, and they live 100 or 200 miles away, and I think that's a permanent change. Yeah, that is a trend. That will, there'll be some regression towards where we used to be, but it won't quite go back there in terms of going back to the office. And that will have major impact on not only on housing and commercial real estate, but on commuting infrastructure, on parking, on how buildings are, how cities are laid out. If that is long term, and it will have, and I think in many ways a very good impact on cities in general.
Yeah, I can feel in myself, speaking as an anecdote N of one, that my behaviors have changed, and I can see myself taking some fraction of trips that I used to take pre-COVID for a long time, probably. And I think that of the people I know personally, a lot of them, found out they could work from home just fine. And so that's a relatively permanent change. And it makes a lot of sense, right? Businesses have discovered, oh, can we save on rental costs and not have all this floor space and be just as effective? Because now if essentially the capital of the company, it's just like what Uber did. It's like, hey, people already have homes. Let's use those, right? In the case of Uber, they used your personal car to be part of their capital inventory. So I think that's pretty long lasting, just because it makes sense and all of that. But then all the things that factors into, like, those people used to travel into the city. They used to eat there. They attended Starbucks there. They wore out their cars on the way there and back, or they used mass transit. There's so many things that get impacted just by even a tiny change in that behavior, that I don't know how you plan for it. I think you just have to observe it and adjust to it.
Yeah, and I mean, that trend has been around for quite a while, but just inconsistent. So Yahoo tried it a few years ago and then backtracked on it, and then others tried it. So companies have tried it, but I think the difference now, this sticks. People were really forced to do this and to jump into it with both feet, and they made it work. For the first time, they actually made it work. And for many jobs, some jobs will go back to the office. So I can't imagine that the new normal will be like the old normal when it comes to working at the office. Like you said, there's a whole economy that's sprung up around these offices, these office buildings, from barbershops that set up down there to restaurants and cafes and retailers and bars and clubs at night, and they all have to adjust, assuming that they never open up again. Some places are still closed and they can't, but it will shift things around a lot.
Yeah. So switching topics, though, I know you've been tracking this very closely, and it must have been a nightmare for the statisticians involved. But jobs, what's actually the story with jobs? BLS says millions of jobs are created and all of that, or whatever. But then you look at continuing claims of unemployed people, and they're just tens of millions, right? With an additional new initial claims of 1.3, 1.4 million on a week over week basis. I mean, it's astonishing. I can't line these two data sets up, and I read something you did, which seemed to take a swipe at it. And if I'm right, you kind of said BLS is going to have to do some backtracking at some point.
Yeah, so the Labor Department reports actual unemployment compensation claims. So these are submitted claims by people who claim to be unemployed, have lost their jobs, lost their work, and they're trying to get unemployment compensation through the state unemployment offices. And it used to be that there were only state unemployment plans, and it was handled by the states and funded by the states, and so those are reported separately. And the continuing claims there are now around 18 million unemployment claims under state programs. Then under the CARES Act, we came up with this unemployment program for gig workers and contractors and so forth. So these are federal programs, and there are now around 15 million people or so under these programs, under these federal programs. And the Labor Department actually gives a composite figure of those two, and its composite of people claiming unemployment compensation under all programs is 32 million. So that would be about 20% of the workforce.
Mhm.
And that would be an unemployment rate of about 20%. And these are people, these are not survey based. And the Bureau of Labor Statistics, on the other hand, works off of surveys. So it uses the Census Bureau to conduct these surveys, and it surveys enterprises, employers, and it surveys households. And it comes up with these two different data sets off of those surveys. And that's very different. What the Labor Department does is it goes off actual claims that have been submitted by unemployed people, people who've lost their work, gig workers, and it counts those as states submit them, and we're at 32 million. And last week, so the one that came out last Thursday, was the second highest ever. It ticked down just a tiny little bit from the week before, so there really wasn't any kind of improvement there. 32 million, that's been it. The Bureau of Labor Statistics claims are just outlandishly off target in this. And what I see, I have never known this many people in my life who don't have a job anymore. You know, these are professionals. You know, these are people that used to work for tech companies, and they used to work in marketing, and they used to work in advertising, and they used to be architects, and they're out of a job now. And some of them think they're going to get hired back, and others think they won't, but they get unemployment compensation. And so they count in the Labor Department's unemployment claims. Now, the Bureau of Labor Statistics says, there's only a fraction of people, a much smaller fraction of people are unemployed based on our surveys. And then in the footnotes, it discloses all the issues it itself has with these surveys and says, well, actually, it would be much higher if we had the question asked properly, and if people had answered it correctly, and then our sample was too small, and this and that and the other. And so you have to go all the way down into the methodology, into the footnotes, to read the disclaimer as to why its own data is off. And so I'm at a point now where I no longer pay attention to the Bureau of Labor Statistics data, because it just doesn't compute. It's not there, you know. And the Labor Department with its 32 million, I mean, there may be issues too. I'm not saying it's the word of God there. There are lots of claims that have not been processed yet, so states are behind. So this would understate it. Then there's some fraud. There's some people who shouldn't claim unemployment, you know, and then it would be overstated. And we had the Nigerians that defrauded the state of Washington. So, I mean, there's all kinds of data chaos going on. But I think that 32 million people claiming unemployment gives us a much better picture of the unemployment situation in the United States than what the Bureau of Labor Statistics puts together on a monthly basis.
Yeah, and thank you for all of that, and particularly the potential wrinkles in this. And two others I want to sort of throw in there. One is that not everybody qualifies to be able to file unemployment, right? So you have to have worked for a certain number of weeks. Different states have different rules, but not everybody qualifies. So I think sometimes people mistakenly think that if you lose your job as a Walmart greeter or something, but if you've only been there for like 3 months, you don't qualify typically. So there's a lot of people who are out of work who wouldn't qualify. And as well, there are people who exhaust their benefits. So they've been on through the whole time and they fall off. So those are two other ways that I think 32 million plus Nigerians minus these other people, I still think it's a little higher than that in terms of people who are materially unemployed at this point in time. Be my guess.
And, you know, give or take a million, it's a huge, gigantic number.
Yeah.
32 million is just an incredible hit to the economy, and it's just a gigantic number.
Right. I'm 57 years old. I pay pretty close attention. I've known a lot of households in my day. I see that the Census Bureau claims that they sample 60,000 households for their employment data, right? I've never heard of anybody who's ever been sampled by them. You have?
I have.
All right. Well, let's clear that up, because I was like, how can this be? Like, that's 0.5% of households. I should know somebody, so now I do. So this is good.
I've been sampled at least twice.
Really?
Yeah.
What do you tell them? You're unemployed, or do you tell them you're employed?
I'm employed. I'm an employee of my Wall Street media mobile empire. You know, so and I've been sampled as an employer also. So on a different type of sampling. That's for the Bureau of Labor Statistics other. So I kind of know it's online, you know, and they ask you a whole bunch of questions, and it's I mean, it's done pretty nicely, and you're compelled to reply. You know, that's how they avoid sampling error. So I don't know what the punishment is if you don't comply. Maybe you get more postcards in the mail telling you to comply. But yeah, so I know that process, and it's always a hassle, but you have to do it, and I do it.
And you fill it out accurately and completely, of course.
Yeah, as far as I can.
But through all of that as well, the Bureau of Labor Statistics, just perversely watching their birth-death model, which is an additive to the business side. They have two sampling things: household and then employer or businesses, and just watching that continue to just sort of like churn like new bodies into the alleged count just tells me it's not a really sophisticated model at this point.
And it would be nice to have a simpler, more transparent unemployment data system than what we have.
Yeah.
And I understand the issues of defining unemployment. Yeah, who is unemployed? When you know, a retiree who doesn't want to work and who doesn't work shouldn't count as unemployed. Yeah, so but a retiree who wants to work but is on a pension, you know, so but he wants to work but can't find a job, so he counts as unemployed. And so I know that there's some issues with the definitions, but yeah, our system is just outrageous. The complexity of it, and like you said, the death birth churn there, and all these other issues, and it comes out now with results that are just completely just so far away from reality that it's just better to ignore them. I mean, I've never seen them to be this far off. Occasionally you think, yeah, they're off a little bit, but man, this is just ridiculous how far they're off now.
Yeah. Do you think politics plays in? Because all the way back, Lyndon Johnson would send back employment reports and GDP reports that he didn't like. He would circle them in red like a teacher and send them back and say, try again, you know? I'd be surprised if that practice doesn't continue, particularly with this administration.
That would be fun if we get some document that shows that somebody in the White House circled a number and sent it back and said, "You're got to redo this one."
Do better.
Yeah.
Well, anyway, so if you put your finger in the air, where do you think we are economically at this point in time? I mean, we got all these millions of people out of work. People are being funded by the CARES Act. It's an election year, so sure, there's probably going to be some more stimulus coming. But can stimulus really paper this over, or what do you think? I'm having a hard time sort of putting all this together into some coherent story.
I mean, that stimulus, people are spending it. So we're seeing that they are spending it, and they're using the stimulus money for down payments on used cars. They're spending it on rents. Yeah, they're spending it on mortgage payments. We also have we have this forbearance tsunami now, where over 8 million people are in forbearance on the mortgages. So they're not making the mortgage payments. Well, that's a lot of money that they can spend on other things. Mm-hmm. And with rent payments, in some places we have similar thing, and there's a eviction halt, so some people are not paying their rents. And some of them are saving those rents for down payments on a house, you know. So I mean, the stories you hear about the distortions from all these programs are just fascinating. And the $600 a week extra in federal unemployment compensation on people that get state unemployment compensation, I mean, that's $2,400 a month. A lot of lower level employees are making more money unemployed than employed, and they're spending it. So, and we've seen that. So we've seen consumer spending, retail spending came on pretty strong. I mean, the people are spending this stuff online mostly. They're not going to brick and mortar retailers. It's spent online. Online sales have been just booming. I mean, Best Buy yesterday disclosed that their online sales were up like 255%. We're going to get e-commerce retail sales for the second quarter in August, in early August. So we'll see, but this should be just a spike to heaven. You know, I mean, people are just completely switching over to online sales now, and on a lot of categories, even buying used cars online. I mean, you can't buy new cars, but you can buy used cars online. So this is, and they're spending money. So this is happening. On the other side, travel industry is still dead. The restaurant industry is still essentially dead in many places. It is in terrible shape. A lot of service businesses are not functioning properly. So there's some real problems there. And at some point, you know, all this money, yeah, this is created money. So that is being spent here. This is just like Argentina printing its own pesos and distributing them. You know, this is going to have an impact sooner or later. So I think the consumer end of the economy, through these stimulus efforts and through these moratoriums on payments for your housing, and so consumer spending, I think, is hanging in there, you know, and for a big part of the consumers. Other consumers that don't have access to these stimulus monies, I mean, they're in really deep trouble, and they're not, obviously not spending, but people who have access to it, they're spending. Businesses are in really bad shape. Many of them, businesses that don't deal with hot parts of the economy, and you know, the layoffs show that. The layoffs continue. I mean, they're not over. We're still, like you said, we're doing 1.3 million newly laid off people a week, every week. For the past 6 weeks, that is just a continuing flow of newly unemployed. So, yeah, I've never imagined ever that I would see an economy like this that is in such bad shape and get such huge amounts of stimulus from freshly created money and the ability to not make regular payments on housing and offices too. Businesses stop making rent payments and on their facilities, and they can spend this money, and so we see that, and this is just a really strange combination. But overall, I think the economy is in bad shape.
And unfortunately, according got Pelosi's statement here, which somehow the people in charge have confused the stock market with the economy, you know, and so it's just really bizarre. I never thought we'd be here to see the stock market, particularly the NASDAQ, powering to all-time new highs, you know, on the basis of this misery you're talking about. And so that juxtaposition, you know, I've been really critical of this because I don't want to live in a failed state. I consider that if you live in a place like South Africa, where all the rich people live behind gates and, you know, have armed guards all the time and everybody else is poor, I consider that not to be like my ideal direction I want to go. So I don't think that's a good way to go. And the Federal Reserve has been absolutely just pushing us that way as hard as they possibly can. And Jerome Powell, who I want to like, Wolf, I want to like him. But he comes out and says the Fed is absolutely not contributing to inequality. I'm like, okay. His middle name is now Pants on Fire, right? So I really think that what they're doing is wrong. And I've been getting sort of morally outraged by it, because before it was annoying. The last 10 years have been annoying, and you can see how they're rewarding one class over another, and Citadel and all the speculators are just siphoning money off. That's one thing. But now they've just flat out said, we're rewarding this very tiny percentage of people. And I think that's corrosive from just a social standpoint. So that's where I've been going lately, is really trying to point that stuff out. But they're immune to shaming, at least from me.
Well, I tried to shame them, but I don't think they pay attention to me. Outrage is the right word, you know, and I have seen some mild pushback on Bloomberg News and in some other places, a very polite sort of people saying, okay, this has gone far enough, you know, there's no reason to go any further. But to bail out the asset holders like this when there's misery spreading around the country, I think that is completely outrageous. You know, if you're an asset holder, you have no skin in this crisis. You've been made whole. You've made, if you're in the right asset class, you've made a lot of money, like Bezos, you know, and some of the others. And if if you're one of the poor schmucks who've lost their jobs and can't get unemployment compensation, maybe you can. So okay, so you get some handouts, but while you're getting the handouts, the other people get the billions, and that just widens the gap, the already incredible wealth gap in this country. And that's probably, when we look back in this period, we'll probably see a historic widening of the wealth gap in the shortest amount of time. I mean, just
Yeah. 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 And I started to lose that tenuous grasp I already had of why I should pay taxes, right? Because, when I read that the Catholic Church receives 1.4 billion of stimulus money, right? And some of that going to dioceses that really had some bad practices. There's a reason they were out of money, which wasn't good, right? And I read that and I'm like, geez, this is a 501c3. Like, these people don't pay taxes. They're just printing money, giving it to them. And I am once again in the donut hole of people who don't qualify for any stimulus. That's fine. I don't need it right now and all of that. But just like in 2008, like, there's no money coming to me and I know I'm going to get hit with higher taxes to pay for all of this when the time is all said and done. And so the people on the very far end of wealth are getting just bailed out, billions and billions and billions. Like here, this just annoyed me no end when I saw that every single time the Fed has said, oh, now we're going to buy fill in the blank, right? So when they did it for mortgage-backed securities, they were starting to tank because, like you said, 8 million people in households in forbearance, right? Mortgage-backed securities tied to those lack of income flows ought to be like tanking. So they were, until the Fed said we're buying them, and they went above par. And the Fed bought them at 103, right? 103 with par being 100. So whoever was holding those should have taken losses, didn't. And the Fed took all of those onto its balance sheet. It will eat those losses. Those losses will be passed on to the Treasury in the form of a lack of payments for excess funds the Fed gets. And then that means I have to pay higher taxes. So I'm just looking at this. I'm like, okay, the rich people got bailed out. There's poor, people on the lower end of the economic scale. So it's right again. Once again, it's like, if you're productive and you play by the rules and you pay your taxes, we think you ought to shoulder all of this.
Yes. And you will shoulder the inflation too.
Yeah. Did I get that right? Am I missing anything in this story? Well, it's a disincentive to do anything. I mean, it really is. Like Charlie Munger said, you show me the incentive, I'll show you the outcome, right? So it's like, geez, should I lie, cheat, and steal, or just give up? It's kind of like, it feels like that's sort of those would be the optimum game theory sort of approaches here. I don't know.
Yeah, it's a crazy period, and what's outrageous to me is not necessarily what the Fed is doing, but how Congress is encouraging the Fed to do that. And the Fed could be stopped in Congress, and that's the place where it could be stopped, and it's not happening there. And it's definitely not happening in the White House. So, I mean, we have a system where I should be able to go to Pelosi, to her office, and say, look, I'm outraged, you need to do this. And she'll just laugh me out of the office and say, forget it, So, we've had Congress set up these SPVs that the Fed is using to buy these assets, and that came in connivance with the Treasury, and it's part of the plan. It's part of the CARES Act. So that's the system we have.
Yeah. So, you know what? Give Adam Taggart a call. He's just north of you. He'll come on down, and maybe you could both stand out there with placards in front of Pelosi's motorcade next time she goes by, right?
Over.
She'll just run you over, right? Probably. So given all this, though, so as you look forward, if you were going to invest money today, what would you be doing with it?
I think it's a really tough investment environment. I'm thinking about this every day. I don't think stocks are going to go much higher. I mean, they could, but they've had a huge run. They're inflated. I look at other global stock markets, and most of them, all the big ones, are way down from their peaks that were a decade or more ago. And the U.S. stock markets are kind of the exception to that, and we may have hit that point finally. I think real estate is in a lot of turmoil. Now, what I would like, and I think this is really important, if you have your own business and invest in it because you control it and you can make money doing that, I think that is great. That is a really good investment where you can control it. And I love my little business, and it's, we're in a crisis and it's not easy, but, that is, and, hopefully inflation will not kill your business. And this, you give a Walmart greeter $1 million and he puts it in the bank and he makes more money in his job than he gets interest off his $1 million. That's the kind of situation that we have now. And it's really hard to make money in bonds unless you take huge risks or you gamble or, you have some complicated trades. Real estate is there's going to be a huge shift. So I don't know what's going to happen in real estate. I've never seen a screwed up situation like this. Commercial real estate and the office sector, I think that they're already suffering. That's obvious, and we've seen that in commercial mortgage-backed securities and there's all kinds of defaults going on. So this is happening in terms of residential real estate. We'll just have to see whether that's a good investment or not. In some markets, I think if you buy at the right price and you rent out the property, and that could be a good business. If rents where you are going up, rents are going down in San Francisco, so that's a tough place right now to make that work. High house prices and falling rents is not a good combination. So it's just a really tough question. You can do precious metals, and that's been a very good bet recently. But that's a non-income producing activity. So that's just a plain investment, but so that's a good one that worked. And so it's tough. I get asked all the time, people who, and I don't respond to that really because I'm not a financial advisor, but with all this chaos going on, where should I put my money now? And that's a really good question. And I think a lot of people are going to end up paying the price for all the things we went through.
I've been I've been talking about gold and silver for years, and I think that having some diversification there always makes sense. But I got really excited, watching the ratio between commodities in general and financial assets, and they got down to a generational low. So if you believe in the thesis that we're going to have some sort of inflation and it's going to be maybe more commodity based, that's an area that I've been pretty interested in. I'm positive oil is going to go back up at some point in the future. It has to, because we're below the all-in marginal cost of production for new basins. So that's got to go up, but it could take a lot longer than I thought. I think that, miles traveled, whether it's on airlines, cruise ships, automobiles, buses, is just going to be depressed for quite a while. So, but that'll turn at some point. But I think you're right. In this environment, I look at any cash I might have and I'm like, I don't know. Maybe I'll buy cans of soup because they're probably going to be more expensive next year. It's my pantry portfolio. I don't know what else to do. But that's what, all the price signals got so broken. If I'm going to really criticize the Fed for anything, that's literally at the top of my list, breaking the markets. I think that's a sin right there. That's not a good thing to do. Yeah.
We don't have markets anymore. That's for sure.
Yeah. Markets.
Yeah.
Yeah. Well, thanks for your time today. If there's, is there anything else you want to do and direct people to, of course, checking out your excellent website?
So I'm the guru at wolfstreet.com, strictly finance, business, and economics. We stay out of politics. Chris and I got into politics a little bit here, but on my website, I'm staying out of it. And just stick to finance and economics, wolfstreet.com, and everything's free.
Yeah, great. wolfstreet.com. We didn't get into politics. We talked about politicians, but there was more of a character issue than a political issue.
I agree with that. Yeah.
All right. Hey, thanks so much for your time today. Appreciate it.
Thank you, Chris.